Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne Man with David Ingles.
Good morning. Let's get to your top stories today. The U.S. strikes a trade deal with the EU, setting tariffs at 15% for most of the bloc's goods. Traders are also bracing this week for rate decisions in the U.S. and Japan, and earnings from U.S. companies worth more than $20 trillion in market cap.
Chinese Vice Premier He Lifeng said to meet with Treasury Secretary Scott Bessent to seek an extension to the current trade truce that's seen a thawing of ties between Washington and Beijing.
Plus, we'll be live at the World AI Conference in Shanghai as China's tech sector seeks to challenge America's dominance in artificial intelligence.
I want to hear from one of the people on the forefront of China's AI development, Alibaba Cloud founder Wang Jian. That special broadcast with Bloomberg Tech Asia coming up.
Good Monday morning. Welcome to the show. I'm going to borrow a specific line from our weekly scene setter to underscore how important these next 5 days will be. If there was ever a 5-day stretch that would define the second half of the year, it's going to be this coming 5-day stretch. Everything from earnings, 21 trillion of earnings, rate decisions out of the Fed. You have data coming through out of the United States as well, non-farm payrolls, including possibly, and we'll see what happens, we're going into a trade deadline, including some potentially market-moving news as far as trade goes. All that being said, idiosyncratic stories are moving these markets. You have, of course, the big reports and news coming through out of Samsung, where, as you can see, 0.2% to the upside on the Kospi index. Samsung's coming up on your screens are up 3% on that, managing to bag quite a substantial business, about 7-8% of annual revenues coming through there. That big order, 2.7% to the upside. A50 futures are trading sideways going into the open today. We did break out of trading ranges last week. That's point number one. Point number two is liquidity remains fairly ample. And there's a big news out of CK Hutch, which we'll get to a bit later on as well. Right, the big news, of course, on the weekend, the 15%. That's Japan, 15%. That's also with Europe. As you can see, we're looking at market reaction. Euro dollars on the way up, and Euro stocks at 50 futures up about 1%. That's a move you don't normally see this time of the day. U.S. Treasuries, we talked about the Fed. We talked about the earnings coming through this week. That's coming up on your screens. Twos all the way to the 30-year yield, up across, just about across the board there. Not completely. We're looking at EMFX, dollar China, and of course, I forgot to even mention this as well. It's very busy. Today we have the Thai and Cambodian leaders sitting down and having these talks, of course, given what's going on there. Dollar Taiwan, dollar Thailand, dollar Taiwan, and of course, dollar Korea on your screens on the back of these trade talks coming through.
Yeah, the craziness you mentioned, right? The sort of earnings parade in the U.S., you had the Fed meeting, BOJ, all the like. You add that to an August 1st deadline for tariffs, right? And that certainly adds to a lot of event risk moving forward. As you say, it's a make or break sort of moment for markets here that could determine what's going on in the second half. And you mentioned August 1st. It's not like once we hit August 1st, we get a lot more clarity when it comes to trade and where these effective U.S. tariff rates are going to be. You still have ongoing negotiations of current trade frameworks that people are saying they're still not quite sure what this all means at the end of the day.
No, and I think there's the SEMP report to your point, right, that they might be able to just push it down the road as far as this 90-day truce is concerned. On top of that, how much can we actually trust the settings will remain in place? And, take a step back, right? Right now, 15% is good news. Markets are looking at it the way.
We've moved back from the cliff, right? Yeah. It's not the worst case scenario, but it's still higher than what some had hoped to be.
How short memories can be.
Yeah.
There we go. The stocks rally going into the open today is one to watch. We talked about the breakout as far as the range is concerned. The AI conference that's taking place in Shanghai, so we have a couple of great guests coming through there with Annabelle, of course, who's on the ground for us. In terms of earnings coming through, Wuxi AppTech, that's number one. Data, June exports out of Hong Kong, that's coming out later today. And, of course, CK Hutch, as we talked about there, additional plot line as far as that consortium is concerned. So we'll talk about that in a moment. Do we have the graphic of the agenda coming through? There we go. Thank you so much. Among the many things that occupying our limited mind space today going into this Monday session.
We're already tired, but no, we're going to power through it. We took our espresso shots this morning on just what sort of week is we're embarking on as well. But yes, let's get to our top story. The U.S. and EU have struck a trade deal imposing a 15% tariff on most EU exports, including cars. Now, it comes as U.S. and Chinese officials prepare to meet in Sweden, working to extend their trade truce. Our senior editor, Bill Ferries, is with us alongside our China correspondent, Min Lo. Bill, I'll start with you. So we averted a painful trade war between the EU and the U.S., but what's changed? What hasn't?
Yeah, so the two sides struck a deal, as you said a few minutes ago, Yvonne. It's not the worst case scenario. Just a few weeks ago, the EU was being threatened with 30% tariffs on their exports to the U.S., so 15% is looking a lot better. What we don't know, there's still a few things hanging out there and a few contradictions between what we heard from EU President Ursula von der Leyen and Donald Trump there in Scotland. We're still waiting for some clarity on things like pharmaceuticals, on metals, on aerospace technology, as well as European alcohol and wine exports. But the big picture is 15% seems to be something that both sides are willing to work with. Still, of course, significantly higher than what was in place before January. But if this deal settles, if it holds, if it goes forward as the final number, it is something that both sides seem to be relatively satisfied with.
And Bill, do you have an idea when we'll get more clarity on some of the outstanding, I wouldn't call them sticking points, but some of the things that we still don't really have certainty over at this point in time?
Well, the U.S. has what it calls these Section 232 investigations going into some sectors. That includes pharmaceuticals, includes semiconductors. Those are all expected to wrap within the coming weeks. And then the president has to make some sort of a decision. The EU president said that her understanding was that the pharmaceutical import taxes in the U.S. would be 15%. Donald Trump said that the 15% deal covered just about everything except that. And metals as well. So steel and aluminum still at 50%. But as we know, as we've seen from this process ever since April 2nd, Liberation Day, things can change very quickly if relations improve or get worse over different issues. The president may switch up and go with something different. So, but the vast majority of products, this is a $1.7 trillion trading relationship, the vast majority of products seem to be facing 15% tariffs starting Friday.
Min, it's round 3 between U.S. and China. What's expected?
Yeah, I think Scott Bessent has set the baseline expectation pretty low already because he said he is expecting the trade truce to be extended. SCMP now reporting based on sources that it could be extended by 90 days. But as Bill was saying, there is the Section 232 sort of investigations going into pharmaceuticals, semiconductors. The question is if both sides do agree not to raise tariffs even further over the next 90 days, what happens when the sectoral tariffs are announced? Will China get an exemption then? And this 90 days, of course, it would also be important to set the right atmosphere for the leaders of both sides to actually meet. We're expecting potentially a window for them to meet President Xi and President Trump at the sidelines of the APEC summit in South Korea in October. And so that could be one reason why both sides may be, so keen on keeping things stable for now.
What might a potential trade deal look like?
Yeah, this is supposed to be a much more wide-ranging talk because Scott Bessent talked about how, Chinese purchases of oil from Russia and Iran could be on the table, but getting China to cut those purchases is going to be quite complicated because it would be very disruptive for the Chinese economy. It's coming against this backdrop of Chinese purchase of U.S. crude oil, coal, LNG has dropped to 0 in the last month. Remember, China has imposed 10 to 15% tariffs on U.S. energy goods. And that was in retaliation to the fentanyl-related tariffs. Bear in mind, Howard Lutnick also saying that a purchase commitment from China, especially when it comes to agricultural goods, could be on the table. But what would the U.S. be willing to give up in exchange for that? The fentanyl-related tariffs, 20%. That's what China is going in asking for reduction for. And so far, they have made some efforts, adding 2 more ingredients of fentanyl into the restricted list. Trump has praised that effort. Is that enough to get the U.S. to lower tariffs? For now, sources are still saying that the chances are pretty slim.
Min, thank you so much. Min Lo, our China correspondent here on set with us, and in Singapore, Bill Ferries, our senior editor, on the latest on these multiple fronts as far as the trade conversation goes. Joining us here on set as well, Chi Lo, senior APAC market strategist at BNP Paribas Asset Management. Good morning, sir. Nice to see you. Markets have done extremely well since Liberation Day. Can I trust this rally, or are markets too complacent?
My view is still complacent. We will get more upside, but it's not very solid because the rally so far we've seen since April, Liberation Day, is due to a change in sentiment and expectation rather than change in fundamentals. Markets were expecting very bad outcomes, 30, 60% tariffs, hitting the world, pushing up inflation and so on. So the market was pricing that in with sell-off. And now things come in worse than expected. 15% tariff, whatever, 19%. So things are still bad, but it's not as bad as before. So that change in expectation and sentiment pushed up the markets over the past few weeks. And going forward, we do need to see the fundamentals come back to play so that central banks, especially the Fed, can nail down what exactly they can do, and then the market go on from there.
You mentioned it's not about fundamentals. Why haven't tariffs made a bigger impact on prices?
Because so far everybody is waiting for the final tariff rate. We don't know.
We might never get the final tariff rate.
Well, that's the problem, because look at the Fed. The Fed keeps saying we don't know the tariff impact, which is true. But we need to know that the implementation of the tariff effective rate, then the estimation can go on from there and estimate 3-4 months down the road, inflation come back by how much, and then how much the economy will be hit. But if we do not know exactly when the effective tariff rate will be implemented, that expectation of calculation, recalculation would just keep going.
Is the worst case the best case for markets? The worst case, we don't get a final tariff rate, or if we do get something, it's going to be substantially higher than normal. Then the Fed's going to need to cut interest rates because it's such a bad deal.
Yeah, but
is that a scenario? Is that the Goldilocks scenario right now? That's
right now it seems Goldilocks, but then I think the expectation is still that the U.S. economy is going to slow down anyway.
Right.
Because tariffs here and the uncertainty of the final rate is going to hit the economy worse later on, in my view. So that is going to prompt the Fed to move. It depends on when the Fed will move, and the Fed will move until it sees when it sees the labor market in the U.S. shows more sure signs of slowdown than what it's seeing now.
Okay.
So where can I expect some sort of pullback if I take a look at cross assets now?
Probably any time.
Well,
because when you look at valuation, when you look at the sentiment, I think sentiment is going crazy. I mean, money is flocking into Bitcoin, into unprofitable tech companies. But these are not good signs for the market in the near term. So if we get a shock, for example, I don't know, China-US trade talk didn't really go that well as expected, that could be a trigger for a pullback.
I mean, there are pockets of the APAC equity market that are doing well that maybe don't seem to have anything to do with trade. I mean, Macau casinos have done well. The Asia market in China has done well. South Korean equities have gone well. I mean, are those idiosyncratic strategies that investors can trust while we figure out whether or not the tariff will have an eventual impact on markets?
Well, certainly the bottom-up approach, idiosyncratic strategy will work. But from a broad basis, we are still quite positive on EM Asia because we believe Asian central banks can cut rates before the Fed. Capital inflows in here because inflation is lower than the developed markets. There's more room for easing overall in Asia. The external surpluses is helping liquidity in the whole region. So we do believe when sentiment turns better for more risk assets, money will come back more to Asia.
How durable is this rally in China right now?
It depends on whether Beijing can really deliver what it pledged for more easing. Now, if we do see that, that's the condition, that more assertive easing and more focus on consumption and other non-investment demand, I won't be surprised to see Chinese stock sustain recovery into 2026 or even longer. We saw that before. 2 years of rally. Last time, 2018, after Xi Jinping promised all these changes and they deliver. And then 2 years after that, we saw Chinese stocks not straight up, but recover for 2 years.
Well, speaking of something we've seen before, supply-side reform in 2015, 2016, that seems to be the market theme right now, anti-involution. Is it going to work this time?
I hope it is going to work, but then this time it's more difficult than 2015, 2016, because back then the slowdown in the market, in the expectation, in the economy was mostly cyclical. Bad property demand and poor exports. The government came in with forceful expansionary policy. It worked. But this time it's more structural as well, that this involution is the latest sign of the excess or the distortion built up over the past 5-6 years, and now it's showing up as destructive competition, market forces fail, in my mind. So the government has to step in. So there's more structural issues that Beijing has to deal with this time, alongside with insufficient demand and weak confidence. So it's not easy, but I still believe more forceful fiscal spending is the start, and it seems that they have started since early this year.
You had anti-involution, you had this sort of mega dam project. I think markets have just taken that and really buying up a lot of these stocks right now. Can we call it reflation?
If Beijing delivers on the forceful fiscal expansion, yes.
Yeah.
If not, it's sort of like, in between structural reform, increase in fiscal expansion, not much forceful reflation.
Is that more important for markets than maybe tariffs and the external?
Well, if we do see forceful reflation forces come back in China, it is going to be more forceful, because China can reflate the economy out of the tariff problem, in my view.
All right, Chilo, thank you so much.
Pleasure.
Senior Market Strategist, APAC at BNP Paribas Asset Management. We're also counting down the opens of trade in Shanghai, Shenzhen, and Hong Kong. We're talking about really the Europe futures and how things are going to wake up there on the back of this trade deal with the U.S. That certainly is helping things, but futures still lower in China this morning. This is the China Show. Chinese Premier Li Qiang says spearheading the creation of an international organization to jointly develop AI. And Bloomberg Asia tech correspondent Annabelle Jewelers is joining us from Shanghai as she covers WAIC. I believe, Belle, you are in the ring. You're watching all that's going on there. But tell us a little bit more about the warnings that we heard from the Premier, but overall what you're seeing on the ground, too.
Yeah, I think there's sort of a few different key themes. Firstly, you've got the government officials that are here. We had Premier Li Qiang, for instance, speaking on Saturday, saying that China can play a key role in terms of global AI governance. But then also, this is the biggest event for AI in China this year. So it's also a really big opportunity for companies to show off their AI innovations. But as you said, humanoid robots are very key focus. And we're actually in Unitree's ring. This is one of the most promising robotics companies in China. But just take a look at what's happening here, because this is a robot boxing match that's just got underway. So this has been happening all weekend. All sorts of different robots that are getting in the ring. We've got Green Helmet here against Black Helmet. Yesterday I had my money on Green Helmet, but today I'm not sure who's going to really win out of this. The point is, though, is that yes, this maybe looks like it's just entertainment, and of course there is that sort of blending of tech and entertainment, but it's an important revenue stream for these companies as well, because they're very much focused on commercialization. We just spoke with Tim Wang, for instance, from Monolith Management, talking about how there actually might end up being a need for consolidation in the humanoid robots industry as well, just given that you've got so many companies that are in this space. But again, this is certainly a huge attraction for the crowds here.
Can't take my Bell.
I feel like they're gonna come crashing up behind you very, very quickly.
Hug them for us, Bell, if you could. If you could. I don't know why they're still wearing their helmets, though. Bell, fantastic. Thank you so much. More with Annabelle there from inside the ring. There, of course, at the World AI Conference taking place in Shanghai. In fact, just on the coverage that we're doing from there as well, Bell, in fact, also spoke with the head of Alibaba's Cloud and AI unit, who says 90% of the technology and services that actually sprung up since OpenAI's ChatGPT could actually be gone in under a decade. Wang, the founder of Alibaba Cloud, spoke exclusively to Bloomberg. Have a look.
I would say, as just like a single organization or single person, you really cannot go that fast for a long time. Okay, you collapse. Okay, like I can work in for 3 days and without any sleep, but not anymore. Okay, not anymore. And you really cannot work 30 days and don't have any sleep. Okay, no way you can do that. Okay?
Work ethic in China is famous.
But I would say collectively, we can have a very fast iteration. Okay, so that's why I really like a stubborn mindset. So basically, DeepSeek could do something very fast. Okay. And then we also have Queen, okay, and then we have Kimi, okay. So collectively, and we can push that fast. I think that's okay. Actually, that's what I think is important. Otherwise, why we need that population? Okay, so that's why when people get together, and it's not just for competition whether you win or not. It's basically you can have the very fast iteration of the technology because of this competition, or because and you work fast this time and you slow a bit, and then other guy move very fast, and eventually we slow down a bit. And if you're good enough, you can catch up again. And I don't think it's brutal, but I think it's very healthy because, and when we work with the people that is very competitive, that would make you much more competitive, because that was the way how I think the new technology will be invented. Yeah.
Yeah, you're talking, I guess, about more of a marathon, not just a sprint race.
Yes.
Is there space, though, for new contestants to enter that race today?
I would say, at least for AI, it's a marathon, because I think nobody could really see, if it's a long journey, it's definitely in the very beginning.
That was the Alibaba Cloud founder Wang speaking exclusively to Bloomberg. And you can watch an extended version of that interview later on the China Show at 10:30 a.m. Hong Kong time. Subscribers can check it out on the terminal and Bloomberg.com. This is Bloomberg. We got our eye on CK Hutch here this morning. So we've just heard in the stock filing here that they may invite a major strategic investor from China to join in that consortium seeking to buy its global ports. Our reporting on Friday said that state-owned player is actually Costco Shipping. So both stocks are continuing this rally here that we saw last week as well right now, Dave.
Yeah, going into the open today, so that's helping lift some of the sentiment and the benchmark, plus, of course, some fairly encouraged positioning ahead of potentially a trade deal or progress as far as that's concerned. As you can see, futures are now higher, 0.3% going into the open. We are poised to open slightly to the upside this Monday. Good morning. Welcome back. You're watching the China Show, counting down to the open of trade today. There's lots of corporate news on the corporate front. We'll get to that in a moment here. But let me again borrow this phrase coming through from our weekly scene setter that the next 5-day stretch could define the second half of this year. Everything from massive earnings in the U.S., some data coming through across the world. You have a Fed decision. You have non-farm payrolls. You have potentially some trade progress with China. We're feeling the tailwinds from the trade deal with Europe and the U.S. Yvonne.
Yeah, and markets interpret that as, look, we are away from the worst case scenario. 15%, it's the same as what Japan got. It's the same as what the Europeans got.
Yeah.
That is actually seen as positive, that maybe we haven't been tied with the 30% tariffs that were threatened for the EU. So that relief rally is still underway here across the Asia Pacific, but certainly a lot of questions on how long can this really last, right? As Dave mentioned, all those macro factors might be showing us a bit of direction by the end of this week, whether it's the Fed and the dissents that we might actually be getting in this meeting. What does that tell us, right, as well? Take a look when it comes to onshore markets opening up, and we're pretty slow going at the start in Shanghai. We're up about flat there in CSI 300, but, we've been talking about these multi-year highs already that have been reached in this rally, and, last week was really about maybe booking some profits here. Looks like we might see that a little bit here as well, but yes, you are also seeing a bit of profit taking in some of these commodities, which really have been rallying on this whole anti-involution theme. We got Goldman coming up here to talk a bit more about that, BofA, I should say. But yes, copper, steel, iron ore, and Shanghai crude are all falling this morning. Iron ore, for example, is down some 1% in Dalian, and we're watching very closely what goes on in Hong Kong, just given what we saw, right? So Goldman lifts China stock index there. Kindra Lau and his team, They remain, overweight, but they have raised their targets now for MSCI China to 95. That's implying about 11% upside when it comes to MSCI China. On what? They're thinking it's some potential U.S.-China trade deal that we could see this week in Stockholm, potentially here easing regulations on the private sector, and also a relatively slightly stronger renminbi, they say, could help. Take a look at what Hong Kong's doing, right? It's really the southbound flow story that really has been driving a lot of the momentum here in Hong Kong. Goldman says, look, they're raising that 2025 southbound net buying to $160 billion now. So maybe there's still a bit of leg room when it comes to this rally here. We're watching very closely what goes on. Citi, obviously, with that price target for Hong Kong Exchange, a lot of it has to do with the pipeline here in Hong Kong when it comes to IPOs and the like. What else we're watching out for here today? Obviously, when it comes to HS Tech, that's one thing we're watching. But yes, the CK Hutchison deal. So the stock filing came in this morning. They mentioned about a major strategic investor in China that's going to be playing a part of this consortium for this ports deal. Our reporting suggests it's Costco shipping. We saw the stock rally there on Friday already here. It looks like we're coming off that a little bit for Costco shipping. We're down some 2%, and we're down a little bit for CK Hutch right now. What we're also focusing on is some of the European exposed sort of stocks that are listed here in Hong Kong. They have been rallying on the back of this EU-China trade deal, US, I should say, trade deal as well. A mixed picture across the board here this morning, Dave.
Okay, yeah, we're also coming off, as Yvonne was just alluding to there, some fairly key numbers on the weekend. We had industrial profits. It really goes into this whole, this new buzz phrase for markets, anti-involution, right? So the data that's come out for June is still a decline of negative 4.3%. As you can see, that's a second straight month that we are getting a negative number. Although sequentially, when you do notice that, of course, that's year-on-year. When you look at month-to-month, there's a bit of a pickup there that might be down to some one-off adjustments. Cars, for example, we can get to that in a moment. But yes, this really underscores the need. How do you improve the profit outlook, particularly for this specific cohort of this equity market, right? Now, that goes into what the market's been running with, anti-involution, CSI 300. This goes back to about mid to late May, this chart that comes up. And as you can see, markets have traded on this, materials. A lot of it also has to do with the fact that you had this mega dam project that added a little bit more juice to this rally. But yeah, it's certainly gotten to a point that it's caught the attention of people. And to what extent, Yvonne, a question, to what extent should we expect earnings to improve, and when? Because this is not a simple Band-Aid on top of your sort of that goes away. This is a structural issue that needs time and effort and commitment to really see it through. And yeah, we've been talking to a lot of our guests about this very, very topic here.
Yeah, is it reflation? It's a big if, because it has to be delivered in the proper way, right? And everyone seems to reckon that, compared to 2015 and the supply side reforms at that time, it's a much different story. Whether it's the rhetoric that you're seeing, but really the macro picture as well. How cyclical really it was back then versus now is a very different sort of story here. Let's get a kind of a listen to what we've heard from our guests in the past few days.
The more it's being produced, the more deflationary the price gets. So the focus is not about working more, but how to make the existing asset yielding a higher return. So it's equity friendly, and on the margin, if executed right, it could be helpful to the global trade in terms of easing tensions coming from China's overcapacity output spilling into the global markets. But short term, it's not GDP friendly or employment friendly. So it's a balancing act.
Many of the new economy sector, right, advanced manufacturing, strategic new sector, green energy, renewable energy sector also have this overcapacity issue. And many of the capacity were actually newly built up. And some of the technologies are commodities. So it's very hard to say, oh, old technology, high energy consumption, high pollution, using those old standards to draw the line to say who are the winner and losers.
Right. Back then, it's the SOEs, it's the upstream companies that were seeing excess supply. And back then, it was quite easy for the government to say, you're an SOE, you need to listen to me, you need to cut your production. But this time, a lot of is midstream, it's private businesses, they have their own incentives. It's harder for the government to just mandate a production curve. So
But then this time it's more difficult than 2015, 2016, because back then the slowdown in the market, in the expectation, in the economy was mostly cyclical. The bad property demand and poor exports. The government came in with forceful expansionary policy. It worked. But this time it's more structural as well, that this involution is the latest sign of the excess.
And let's bring in Matty Zhao, BofA Global Research, co-head of China Equity Research. And it just so happens that a lot of the areas of coverage that we talked about here just fall specifically under Matty and her team's coverage. Basic materials,
Cement.
oil and gas research.
We're finally going to talk about cement.
Yes. Why don't you start? What's top of mind for you?
Yeah, sure. Actually, I think the anti-involutions in my sectors are focusing on like cement, steel. Probably you also hear about solar materials as well. And also there is some news about coal, but we think coal is not falling within the anti-involution sides. And it's quite different from what we are seeing in 2016. I think we also saw some of my other colleagues talking about it as well. Because at that time, you are actually boosting demand. And at the same time, you are actually cutting all the illegal capacity. So you have the legal ground to cut. Okay. But now, a lot of the sectors like coal and steel, you actually have already cut all the illegal capacity during last round. And so in order for further cuts, you have to come up with what ground, who are you cutting, and what extent. So that would be with each subsector, you need to come up with a specific plan. And that would take a longer period of time. And for cement, at least we already have a plan on cutting. So to cut from current 2.1 billion ton to 1.6 billion ton. So that one, at least we have a plan, and cement hasn't been cut during the last few rounds.
That's right.
So that's why the capacity is still illegal or over the allowed capacity.
Okay.
So once you have the legal ground, it's easier.
I mean, it seems like markets are just buying up everything, right? Coke and coal futures are at, 7-month highs and the like. So you're saying maybe coal might not be the focus here. What else is not in the focus?
I think some of the areas would not be the focus, but it just happened to have other newses. So, for example, coal, it just happened to have the safety check. And, of course, during the now it's the very hot summer. So you have a supply disruption during the safety check that would affect, the prices as well, and, of course, the sentiment. Also, for the coking coal, because before the rally, it actually hits so from nearly 3,000 to 1,200, it actually hit the cost supports. So that also provides you more room to go to hike. I think another one, like in a lot of chat, like lithium. Lithium was also not the big focus of the government. But of course, we have a lot of rumors or market news talking about Jian cut, etc., that happen at the same time, and people have connecting them with anti-involution.
Doesn't the coal sector employ a lot of people? And the reason I ask that is that does that become then a factor to decide? That's almost an employment question when you talk about whether or not you want to cut capacity in a sector that employs some people, a lot of people.
Yes, coal and steel both employ a lot of people. Coal employ about 4 million people, actually over 4 million people, and steel employ over 4 million people as well. And what makes it worse, it's very concentrated in certain provinces because coal is very concentrated in Inner Mongolia, Shanxi, and Shanxi, and steel is very focused in Hebei as well. So for those local government, it would be very difficult to resolve the unemployment issue in the near term. And like I said, because last round in 2016, you already nearly cut 1 billion ton of coal, i.e. 20%, and 150 million ton of steel, 15% at that time for unlegal ground. Now you don't have the unlegal ground to cut them. So you have to come out with a quota, which takes longer time.
The launch of this mega dam in Tibet, how are you factoring that into your forecast right now?
Yes, that of course boosts the market sentiment, right? But if you look into the real demand, it's actually not that much. So for steel, we estimate it's 40 million ton of steel extra demand over 10 years, i.e. only 4 million ton a year. And currently China is 1 billion ton market. And cement is 30 million ton over 10 years. And China now is 1.2 billion ton of market as well. So, of course, cement, because it's very regional. So for Tibet area or over that area, that's meaningful because Tibet is a 14 million ton market. So a 3 to 4 million ton a year is already 20% increase. Yeah.
I want to ask you more about steel. How do you think this affects, for one, the steel price, because we've seen markets rally there. how does it affect the amount of steel that China is able to export, and also their demand for things like iron ore, for example, which is of rather sort of global consequence when you look at markets like Australia, for example?
Yeah, sure. I'll answer your second question first. If you look at last round supply side reform, steel prices shoot up from 1,800 to 4,800, so 2.5 times. Iron ore also shoot up during the same period, but to a smaller extent, so steel margin expand. I think from a fundamental perspective, iron ore shouldn't go up, because you're actually basically cutting the demand for iron ore, right? But from a sentiment perspective, it will go up first and probably will gradually ease up. And iron ore, in terms of percentage, should also go smaller compared to steel. And also, like I said, compared to last round, it's much smaller scale and also much longer period. So I think iron ore, apart from the initial sentiment, it's probably going to ease off. So our view is we're still relatively cautious on iron ore on all these senses. Yeah, and go back to your first question in terms of steel export. We still believe in the near term, steel export will remain at about 100 million ton at high level. The reason is because the steel cut is only 3 to 4%, while the demand, because of the weak property, is also dropping 3 and 4% as well. So in order to keep a relatively decent margin, we still need to force some of the steel out.
So if I need to make an anti-involution portfolio,
long basket, yes, yeah.
what would be in it?
Okay, on the long side, of course, all the stock have already rallied. So if you look at the valuation going into it now, if you are only looking at 1 or 2 months return, may not be a very sensible way. Probably better to let the market cool down a little bit and go into fundamental. From a fundamental perspective, we still like copper, we still like aluminum because they're supported by demand. And if only on the anti-involution perspective, I think at least cement, you have a plan. So even though it takes 12 months, at least you have a plan. You know where your target is. And we have coal prices decline to help the earning. And we are also relatively, on a comparison basis, more positive on steel versus iron ore and coking coal.
What about autos? EVs?
Autos?
Yeah.
Autos, I don't cover, but in auto materials or the auto battery like lithium. I think, of course, everything eye on the 9th of August for the CATL mine, given that's when the license is going to be renewed or not. If it's not going to be renewed, that would largely affect the lithium supply and demand, because CATL is nearly 5 to 6% of the global supply. And we are just 5 to 6% oversupply. So that's where whether we can really have a fundamentally more positive on the lithium.
Matty, great to have you. Matty Zhao there, co-head of China Equity Research and head of APAC Basic Materials, Oil and Gas Research at BofA. Everything anti-involution. Putting more ahead, this is Bloomberg. Well, the World Artificial Intelligence Conference is underway in Shanghai, and the event showcases a variety of cutting-edge Chinese technology and brings together many leaders in the sector. Our Asia Tech reporter Annabelle Jewellers is there and standing by with our next guest, Belle.
Thanks, Yvonne. Yeah, it's that really big focus on robotics at the event. So I'm pleased to say that we're joined this morning by Deep Robotics, Directors of Americas. That's Eric Wang joining us this morning. So thanks very much for the time. But let's start with your focus on the North America market. I mean, this is something that's 6 months that you're into so far. What's been the reception and the appetite for your products so far?
I think so far we are very popular in the United States. We didn't expect so much demand. Actually, it can come out in the second year when we landed on American market. But so far, so good. We have already established our sales channel with quite a number of distributors already.
And who are the distributors? Which industries or areas are you looking into in particular?
Yeah, it's quite a diversified group of people. Some company, actually public company in U.S., either they have their own factory for local produce golf car, or they have their furniture production line. And the rest of them are located in either for drone distribution, even Amazon. They are also our customer in US already. Yeah.
This week as well, I mean, there's a lot of different robotics companies that are here, and Unitree, which is right next to us, we've had headlines that they cut the price of one of their products from $12,000 to $6,000. That's sort of like race to the bottom. But a price cuts, or is that something that you also need to consider for your products as well?
So far not, because we actually Unitree and us in US are quite focused on different market. 90% of our customer actually enterprise, which means we are doing business-to-business application for our US customers. For Unitree, based on my knowledge, they are focused on business-to-consumer and education sector. Actually, in the second half of this year, we are also shift some of our energy, allocate resources to business-to-consumer market. So there may be more competition in the second half of this year. Yeah.
US to China trade, I mean, it's that big focus as well on the tariffs that may come for Chinese products. How are you also managing that risk?
Actually, the tariff is the concern of everyone in the United States between US and China. They affect the supply chain very much, and people always hesitate when we think about the tariff. It's not a very small tariff. It's actually 50%, right? But for us, it's still quite manageable because in US, actually, we are working with our US customer on win-win situation, which means we supply our robots with a locomotion capability. But our customer, they are focused on their application. US is famous for their innovation and their software capability, and more importantly, they have computing power. So we merge with technology of both parties, and actually, AI is just booming in US. And the labor cost is high over there. So our customer actually can earn much more added value, even after considering a tariff added. So we don't see too much hesitation in the U.S. market this year.
So you're not concerned, just for people to be aware, I mean, you're exporting more of the hardware, the product makes it to the U.S., they maybe pay a tariff on that, but then they add the software, and that's when the value of it really increases. How much value then does that put one individual unit versus, say, the unit of a person, the labor cost as well?
Oh, yeah. The return of investment after purchasing our robot is really quite impressive. You know, the labor cost in US is $25 to $30 per hour. So the annual cost for maintain for the inspection of machine for 24 hours will be at least $200,000, which can purchase at least 2 to 3 robots of us. So return on investment after our customer purchase our robot will be very, very attractive. That's why we don't see a lot of obstacle and challenge, even the tariff is so high. And don't forget, our software partner can add many software on the shoulder of our robot. So they can charge by license, by software, they can earn much more.
I mean, there's a lot of different robotics companies that are here today.
Yeah.
We were just speaking earlier with Tim Wang from Monolith Management, and he was saying that maybe in the next few years you're going to have to see some sort of industry consolidation. Do you see that happening as well?
I think after a few years, yes, because now technology is developing so fast. But if we talk about competition today, we must differentiate the industrial traditional robot from our AI robot. For industrial robot, everybody has same capability, similar functions. Of course, the price competition is very fierce, very hot. But for our robot, it's an AI robot. Nowadays, you can see many similar robots in the exhibition hall. But prototype is easy, but mass production is difficult. To make them reliable, can work for a long time without maintenance, is not easy. So far in US market, we don't see very cost-effective and reliable competitor. And we don't see they will happen in 2 to 3 years. Yeah.
Eric, thanks so much for your time there. That was Eric Wang there. He is the Director of Americas for Deep Robotics. I'll toss it back to you guys, and Yvonne, David as well. Eric told me he's a big fan of your show.
Aww.
Oh, really? Okay.
Can he come with and bring some friends, robotic friends?
Yeah.
Not lying.
Yeah. So tell him, 我们也 AI 他吧, right?
Yeah.
We love him as well in the AI conference there. Bill, sorry, dad jokes so early. I need another coffee.
He was very flustered by that comment. He didn't expect it.
Yes. I never know how to deal with flattery, actually, sometimes. I need to work on that, too. Especially on live TV. Come on, Bill, don't throw that curveball.
Okay, we got to go to break, though.
That's a good thing.
We'll deal with it during the break. Play more
we'll
ahead.
See you later.
This is Bloomberg.
Right, welcome back. Some unexpected, promising guidance coming through at Alibaba Gold, although as you can see, the stock's gone. Maybe it's a sell in the news dynamic that we're seeing today, although as you can see, the company's now guiding towards, let's call it 300% pop in first half profits on the back of everything else that's going on there with the stock's down about 2% this Monday. Jiangsu Hengrui is also one that we're tracking today. We're up 7-8% there. $500 million deal with GSK, so that's going to be an addition that the markets are discounting at the moment, given everything that's going on here.
And coming up on the China Show, an extended and exclusive interview with Alibaba Cloud founder and Zhejiang Lab director Wang Jian on China's AI future. Welcome back to the China Show. Here's a look into the HSI a half hour into the session. And yeah, things are looking pretty good right on this Monday morning. Why? Well, the EU and China and the US, I should say, have come up with a trade deal, 15%, better than expected or less worse than expected. And the US and China are set to speak in Sweden. There's already talks of maybe extending that trade truce.
Yeah, in fact, Goldman Sachs has raised their target for MSCI China from 85 to 90. That's a 12-month target on the back of what Yvonne was pointing out there, this potential Sino-U.S. trade deal. Per market trading partners from jurisdictions, we have concluded the trade agreements with the U.S. I'm quoting Kinjer Lau here. A potential U.S.-China trade deal could be a market clearing event for Chinese stocks. That's from Kinjer and his team. They're projecting an additional, indicating at least an 11% upside on MSCI China from where we are. There's an overlap, of course, of constituents between the benchmark at the bottom and the benchmark on the big screens. You see, now, the 1% gain we're seeing now in European assets this time is a reflection really of the similar dynamics of what markets are doing with this. So we'll continue to track this. And by the way, Europe has done exceptionally well as an equity market. And then there is this to consider. But how quickly markets forget that 15% is now a great thing. Let's move things along. Have a look at Samsung Electronics, the Kospi Index. We have a fantastic story out today of really a top 5 or 6 market, I believe, globally this year, and why global investors are chasing the Samsung Electronics today on the up and up substantially on the back of this additional 17 billion chip making deal. We're not sure, though, who the counterpart of this. We're trying to endeavor that. But in any case, of course, on Samsung's side, we're looking at already some upside as far as that specific stock.
Oh, yeah. But the speculation is just going rampant of who that player is, right?
Mystery buyer.
A mystery buyer. But I guess you can guess if you've been covering this story for a while. In terms of the top themes, I mean, we talk about the amount of event risk this week. And they're saying this is really the make or break week for a lot of traders out there, and really going to determine what the whole rest of the second half is going to look like, right? We talk about the Fed, we talk about the BOJ, we talk about the U.S. data like non-farm payrolls that comes out. All are going to dictate what's going to happen and what the Fed's going to do. It's interesting, right? The dissents that we could be seeing here, potentially too, right? We're talking about Michelle Bowman, we're talking about Christopher Waller. Is this a sign of a turning point in Fed policy? A lot of people say maybe that's what you start to see, these dissents, once people start to turn, maybe. But are we all just talking about auditioning to be the next Fed chair, too?
Is this the monetary policy version of American Idol? Just let us know what you would do with the crown if you got it. But I guess to your point, right? We really come together on the major themes this week. A lot of people talk about how valuations are stretched, that we are still headed for a slowdown, no matter what happens with the trade negotiation. But if big tech delivers this week, then markets can ignore maybe all those concerns for the next couple of months still. So it's the second half story which will be determined this next 5 days.
It's like 4 of the Mag 7 reports this week, right?
22 trillion of market cap reports this week. That's 15% of global market cap. 138 trillion if you're curious where I'm getting that math from. Okay, let's take it back to trade here. So you have the US and the EU striking a trade deal, 15% tariffs on most, not all, on most EU exports, including autos.
We've reached a deal. It's a good deal for everybody, I believe. And I think you were saying this is probably the biggest deal ever reached in any capacity, trade or beyond trade.
It is.
It's a giant deal with lots of countries.
We have a deal. We have a trade deal between the two largest economies in the world. And it's a big deal. It's a huge deal. It will bring stability. It will bring predictability. That's very important for our businesses on both sides of the Atlantic. It's 15% tariffs across the board, all inclusive.
And it does come as U.S. and Chinese officials are meeting on Monday in Sweden to possibly extend a trade truce. Let's bring in our team here, Min Miller, our China correspondent, and Jill Deeses, our news desk editor, to talk us through this. Jill, let's start with the EU and you. What's the key takeaway for you? And can we trust that this is it? Have they signed anything?
Well, no, I wouldn't trust this right now. I think the way that Yvonne characterized this earlier, less bad than expected, is probably about the sentiment here that we want to go with. I mean, let's remember that at the beginning of the year, as Trump was coming into office and we were starting to, see traders price in what they were expecting from tariffs this year, I think that 10% baseline was really kind of where we had landed. Obviously now we're cheering a 15% tariff trade deal, right? So I think that that's really important. I also think, there seems to be some disagreement or at least some confusion over what exactly is included like this. I mean, you just heard Ursula von der Leyen say there that this was an all-inclusive 15% deal. She's also said that this would cover pharmaceutical products. And we've got Trump saying, no, it doesn't, that we're still waiting for these sectoral tariffs on pharmaceuticals within the next couple of weeks and that this wouldn't necessarily be, included in that. I mean, we've also heard from some, U.S. officials that maybe they are. So again, that's, I think, really kind of it really kind of underscores here one of the big issues with some of these trade deals, which is that, okay, you're reaching this reciprocal tariff agreement. Again, still waiting for white papers and all these different, deals. And also, sorry, just a small tangent. Usually it takes literally years to sign a trade deal, not like 90 days or, what have you. So I think, still a lot of concern over what exactly this all looks like at the end of things, particularly after, August 1. But, we still have to see how the sectoral tariffs really factor into these reciprocal tariffs here.
And that's the thing, right? Once we get to August 1st, it's not like it's the end and we get all this trade clarity.
Exactly.
There's actually more questions leading up to it and what these kind of frameworks are going to look like.
Yes, exactly. So, I mean, again, we've seen this before a little bit with the UK deal earlier this summer, right? We just had a few details there, but still a lot to work out, particularly when it comes to some of these 50% steel tariffs and such. I mean, Vietnam also reached a trade deal, although we had heard, after the fact that Vietnam was still trying to lower that a bit. We've heard obviously from Japan a bit. We've heard, all these different countries that are working on this. But yeah, I mean, still it seems like a lot to work out here.
Min, let's talk about Sweden. What are we looking at there for any potential progress on that fairly complex part of the trade negotiation?
We're looking at status quo for now. Scott Bessent has already signaled that he's expecting this trade truce to be extended. He didn't say by how long, but SEMP reporting by potentially 90 days. And remember, this is coming as both sides are working towards this leader summit between President Trump and Xi, potentially in October at the sidelines of the APEC summit in South Korea. So there's a lot of interest from both sides to keep things calm in order not to derail that summit. So this could be just the first step, one of many, as they work towards a larger trade agreement, because remember, we know the two presidents will want to have something material to be able to announce when they do meet as well. So right now, bar is very low going into this, but we know that it is going to be a very wide-ranging talks. China is looking at, wanting to lower the tariffs for fentanyl, the fentanyl-related tariffs. They also want the U.S. to loosen some of the restrictions when it comes to trade, and the U.S. has its list of demands as well.
So what would a potential deal look like?
Yes, so as I mentioned, it's going to be very wide-ranging. Yeah. Scott Bessent mentioned that Chinese purchase of oil, sanctioned oil from Iran and Russia is going to be on the table. But of course, if China cuts its buying of these oil, who is going to benefit? The U.S., because right now China's purchase of U.S. energy products has already dropped to zero in the last month, thanks to the tariffs that were imposed in retaliation to the fentanyl-related tariffs. And then there is purchase commitment on agricultural goods. that Howard Lutnick mentioned. So if the US wants China to buy all of these things from the US, are they going to be willing to lower the fentanyl-related tariffs? That's really at the heart of the matter, especially given China has shown its sincerity by adding a couple of fentanyl ingredients into the restricted list. Is that enough to appease the US?
All right, Min, thank you, our China correspondent there. Also, our thanks to our news desk editor, Jill Desus, on all things trade here this morning. And Dave, we talk about how busy it is. It's going to get pretty busy.
It will. The moment of truth markets are waiting for will really come this week. Third time I'll mention this phrase from this fantastic week ahead piece. If there ever was a 5-day stretch that would define the second half of this year, it's going to be these next 5 days. And we don't really have to go through each and every one of this, but everything from macro to potential clarity on several points of friction in these markets. You have Fed decisions, you have a July jobs number coming through, and we haven't even gotten to earnings. 22 trillion market cap reporting this week. You have the Mag 7 pretty much, with the exception of NVIDIA and a couple of that have not reported already. That's coming through these next few days or so.
And let's bring in Joseph Shaposhnik, their founder and CEO of Rainwater Equity, to talk us through what's ahead. Joseph, it looks to be a potentially pretty turbulent week, but markets are still doing so well. Take a look at the S&P. We're at or even close to records here right now. And, some are arguing there is complacency. Are we priced for perfection right now?
So much for a slow summer, right? If you go back to if you go back to 2019, the multiple on the equal weight S&P was approximately 17 times earnings. If you look at today's equal weight S&P, after all that's happened, COVID, tariffs, everything that's happened, the equal weight multiple on the S&P 500 is 17 times. So in general, I think it's tough to make the case that the S&P or the U.S. stock market is on an equal weight basis excessively valued. Certainly on a cap weighted basis, it's been probably never more expensive and never more expensive than the rest of the world's stock markets. But I view the S&P 500 in the U.S. as the great growth stock of all countries today. It's growing faster than the other countries, it's more profitable and has higher returns than the other countries do, but is also more expensive than all the other countries are on a multiple basis. So that's just something to keep in mind. I think the news today and over the weekend is certainly going to be positive for the S&P 500 and U.S. stocks. It's just a lessening of the uncertainty that has faced the markets for the last 6 months. And the market is coming around to the view that tariffs and the tariff noise and the tariff wars are receding into the background of what's actually driving stock, which is earnings and cash flow. And they'll always be in the background, particularly under this administration. But certainly the deal that was announced today with the EU and the deal that was announced with Japan is building the confidence of U.S. investors that tariffs are not going to be the end of the U.S. stock market or the end of the bull market rally, but potentially could give everybody the confidence that this rally can continue.
Okay, Joseph, David here. So that's the top level sort of index advice. What is the specific investment advice then? How do we continue to chase this rally? Is my question here, Joseph.
Well, look, I think that the important thing to do is to look at the Mag 7 and identify who's winning with regard to AI. You've got to be exposed there, and so certainly we are. And then you have to look at every other sector in the economy, which is much cheaper than the technology sector and much cheaper than the S&P 500, and find the great ideas there. And so for us, that's some defense stocks, that's aftermarket aerospace parts companies. You can see that aerospace was excluded from the tariffs here. So clearly there are certain pockets of the overall economy that will do well regardless of the tariff rates that hit in the individual sectors. And so we're focused on who's winning in AI, who's winning in the industrial world, and who will benefit from perhaps a more competitive U.S. industrial complex. And so we're finding opportunities in those two areas.
Joseph, what are you looking in the second half on what could potentially bring down this rally? Is it contingent on whether we get a cut from the Fed, for example? I mean, what else do you think it could be a potential headwind that could actually change your thesis?
I think a cut from the Fed is inevitable. You're seeing data that continues to make the case that we have a benign backdrop for lower rates. You're seeing the conversation between the U.S. president and the Fed chairman become more and more public, which probably indicates that we're trending toward a rate cut here. Certainly, there were comments on Friday which led people to believe that that was likely to occur. So I think it's more likely than not that we see a rate cut in the next 6 months or so. I think what could derail the rally is that it all goes back to fundamentals. If we continue to see great growth from the U.S. economy and from the S&P 500, this rally will continue. The U.S. market is not overly expensive and not too expensive to continue to appreciate. But if we see a slowdown in the U.S. economy, if we see rates that are persistently high, those certainly pose risk to the rally.
Joseph, what happened to the, I'm not sure if you were a buyer to begin with, of the, the U.S. exceptionalism over agenda from about 1 or 2 months back? Whatever happened to that? And do you think the rally now puts that, I guess in many ways, put that speculation to rest, do you think?
Well, look, I think that the economies outside the United States, the stock markets outside the United States are so inexpensive relative to the S&P 500 that it wouldn't surprise me if we continue to see leadership shift from the S&P 500 to other stock markets. Certainly with our portfolio, we've moved our exposure more to Europe and to other markets where valuations are more attractive. So I think there will be winners and there will be losers, and it'll be very company specific and market specific. And of course, that's the job of the portfolio manager to identify.
Well, that's why we appreciate your time and speaking with us, of course, to give us those nuanced insights. Joseph, thank you so much for taking the time on a Sunday at that. Joseph Shaposhnik, their founder and CEO at Rainwater Equity, joining us out of the West Coast this morning here in the Asia Pacific. Right, coming up here on the China Show, an exclusive interview with the Alibaba Cloud founder and Zhejiang Lab Director Wang Jian on China's AI future. Subscribers can check it out on the terminal and also on Bloomberg.com. Welcome back. You're watching the China Show. The shares of Samsung are up 2.6%. As you can see, coming off a little bit highs of the day, still substantial and outperforming the benchmark and the regional index today. You have the company saying it has landed a $16.5 billion deal, chip-making deal with what it calls a major global client. Run the speculative bells and whistles ringing in your heads right now. Now, the contract runs from 2025 this year through to 2033. So divided number maybe across those number of years. Let's bring in Masahiro Wakatsugi, our Bloomberg Intelligence senior analyst in Tokyo for us. Masahiro, how do you read into this specific announcement?
Yes, actually, we have not heard very positive news from Samsung foundry business. So basically, I think that the news is really good for the company. And $16.5 billion US contract, maybe it's about 8 years the contract. So maybe on an annual basis, simply calculation suggests that around $2 billion US could be added to the foundry business. So we calculate it should be around a 10% increase for the foundry business. So that's a really good number for the company. And if we imagine that they are making a progress, it should lead to the other customers making a contract with Samsung going forward. So maybe, basically speaking, it's a good news for the company.
What do you see as the potential impact then on its revenue?
So maybe, actually the 10% increase could be possible for the foundry business. And the more importantly, I think that the foundry business is at this point making a loss of, as a business. But going forward, we can expect utilization rate to improve, and leading to the maybe returning to the profitability again. And also maybe next year, year after, they are shifting to the next generation transistors, meaning that it might say that they are making a good progress for the maybe 2 nanometer or even 1.4 nanometer technology. So in that sense, we can expect Samsung to smoothly migrate to the next generation transistors.
All right, Masa, thank you. Masahiro Wakasugi there, our Bloomberg Intelligence senior analyst in Tokyo. As we talk about those Samsung shares that are up this morning, we are also tracking what's been going on in the Thailand and Cambodia border there. Of course, those talks are set to be happening later on today, this afternoon. I believe it's Hong Kong time, 3 p.m. And what we're hearing so far from the Thai Army deputy spokesman on these clashes, that they actually do continue before the leaders meet along the border. So certainly we'll continue to see still some action there. But as we hear, right, there has been some mediators in this whole conflict, I guess, and really it's the U.S. president who's been urging for the two sides to meet here and really use these tariff threats to press for some sort of ceasefire.
Yeah, we'll see what happens with this. This comes to, we'll get more details on this in the afternoon, of course, as one is just pointing out there. But on the weekend, certainly there is encouraging news going into today, but how quickly this escalated, of course, to the point that this is now, of course, a developing story. We'll continue to track. Dollar bot has reversed now the early gains, and as you can see, we're now at the starting point of the Monday session. Plenty more ahead. This is the China Show.
All right, a big corporate story that we're flagging for you today is,
Major
of course, CK Hutchison. So they are saying that they're in talks now to bring a major Chinese investor into a consortium aiming to acquire its global ports. Now, the move is designed to shore up investor confidence amid uncertainty surrounding the deal. That's why you're seeing the shares up for another day. We're up about 1.6%. Let's bring in our conglomerates reporter, Shirley Zhao. Tell us a bit more of the latest progress of this deal.
So a 145-day period for exclusive talks between CK Hutchison and the buyer consortium has expired on Sunday. And CK Hutchison early this morning sent out a statement saying that they may invite a major strategic investor from China to join the consortium. And they said that talks are still progressing and it's necessary to invite an investor. It's necessary to change the membership of the consortium to be able to gain approval from all authorities. And that's pretty much in line with what we've been reporting, that China's state-owned Costco Shipping has been in talks to join the consortium, and that's considered a way to ease China's anger and concerns over the deal.
Okay, Shirley, before we get to what to watch out for next, just to mark this breaking news that's come through as well, according to our sourcing here, and we just talked about this literally a few minutes ago with Masahiro Wakasugi here, a Bloomberg scoop. So what we know is Samsung has said a major global client, they've bagged a major deal, $16.5 billion. Our reporting now points to Tesla being that global client. So Samsung to produce Tesla chips in the $16.5 billion multi-year deal from July of 2025 through to 2033, according to Samsung on the timeline, but our reporting, Yvonne, suggests that we now have more information on this. Go ahead.
And certainly, as Masa mentioned from BI, right, this is seen as a positive, right, because they really have had to find more clients here when it comes to their foundry business. And certainly they've been kind of lagging behind, of course, the TSMCs of the world, which basically cannot meet all demand right now. So they have been losing ground in chip manufacturing for some time now. So this deal potentially could help at least narrow that gap for now, if they can get enough orders to fully utilize that foundry capacity. So certainly that is the news. According to our sources, Tesla is that big client.
Yeah. Okay. There we go. We'll table the story for now. A company spokesperson has declined to comment regarding Tesla. That's a spokesperson for Samsung. And representatives for Tesla did not also immediately respond to requests for comment, just to also get that out there. Shirley, I'm sorry I've interrupted you. Very quickly, what's to watch out for as far as the CK Hutch deal is concerned? What's next?
So I think we're all watching very closely what kind of a role that China Costco shipping will take in the consortium. We reported earlier that Costco is asking for a role that could grant it a really powerful, veto rights or similar powers, so it can protect China's interests in the consortium. And how would the U.S. side see Costco's request? And we think that this is one of the things that's worth watching, and the negotiations going forward will be centered around Costco's role as well.
Fantastic. Shirley, thank you so much. Shirley Zhao, our Bloomberg Conglomerate's consumer and gaming reporter. Plenty more ahead here on The China Show.
Well, the founder of Alibaba's cloud and AI unit says 90% of the technology and services that have sprung up since OpenAI's ChatGPT could be gone in under a decade.
Yeah, in this exclusive interview, Alibaba Cloud founder and Zhejiang Lab director Wang talked to us about China's AI future, his career journey, the mega pay packages we're seeing being offered to lure AI talent in Silicon Valley.
It is the change the way actually how we're doing things, and actually how we think about things. Okay, so I have a psychology background, so artificial intelligence as a word or even as an area is not new for me. And so when I was in the college students, and we already start to do that. Okay, that was in the early of 80s. Okay, but if you look at the technology, at that time, actually, technology is in a very shaky stage, okay? So whenever we're talking about all the AI at that time, and we're talking about what we're talking about, the toy problem. So all the questions we try to answer at that time is an articulate answer, or basically it's artificial problem, okay? So at that time, you're thinking about the artificial intelligence to try to solve the artificial problem. Basically, it doesn't mean anything. But today you can see actually the technology is getting real. And the problem we're trying to solve is really the heart. It's a real problem, okay? So big change is, at least from my experience, from a shaky technology, solve an artificial problem, and we really have a great technology to solve the real problem and the hard problem. That's a big change.
You mentioned how AI can also change the way that we think.
Yeah.
How do you see that relationship?
It's actually very direct, okay? And when we're talking about, people talking about like a computing power. And when talking about computing power, we have said, okay, we have like 10x times, okay? We're talking about that. But if you're thinking about the time, okay, why, change the way of thinking? And let me put it that way. And if I give you like 1 million times of computing power, you will change the way of doing things, okay? Just like, okay, I'll give you a bike, and you have your own way thinking about how you get from Hong Kong to Shanghai or to Hangzhou. But I give you a car, and you have a different way of thinking how to get there. But if you give it an airplane, it's another story, okay? And so the airplane is our, limitation to thinking about how to get from Hong Kong to Hangzhou. But if I give you a rocket, and then it's completely change the way of thinking about how to do things. So I think the computing changed our way of thinking, doing things like that way, okay. Yeah.
Then how does that relate if you're saying that this reaches a point where you're sort of like, if you're talking about transportation routes and you've gone from walking to the bike to the car to the rocket.
Yeah.
What about then that evolution that people talk about from AI to AGI to ASI, general to super? I mean, is that the right way of thinking about it?
Certainly, I don't like this kind of, classification, okay? So the AI is AI. The only thing we could say that we have AI to super AI, whatever you call super AI is, okay? It just mean the evolution, and it just mean you get more capability, that's it. It's really hard to differentiate them, So just like even for the human growth, okay, we from kindergarten to the PhD, actually it's continuum, okay. Certainly your capabilities grow, but it's very hard ties, really the fundamental difference, okay. Kids have great, learning ability, okay. That's pretty much seem like you are a PhD student, okay.
What about the shift to embodied AI?
Uh-huh.
I mean, a lot of companies are getting into humanoid robots. So
yeah.
What's your view?
It's also it's a very interesting phenomenon, I would say, because if you look at AI 30 years ago, not mentioned about 50 years ago, AI is a very specific. I would say it's a very narrowed area. So at that time, AI is AI, natural language is natural language, and the computer vision is computer vision, and the robotics is robotics. That's a different discipline, okay. But today, that AI become a big basket, okay. So the person who work on the natural language say, okay, we're working on AI, which is true today, okay. So I think that you have to make sure the robotics is a robotics, okay. And so what I see is robotics, whether you call robotics is AI or not, I'm not sure. But whatever AI produced could be deployed in the robotics, that's true, okay. And so that's different things. I would say the robotics is a very different field that has fundamental technology is different, and but they need the AI. So it's more like, okay, if the car is a car, and you have the diesel engine before, but today that we have EV cars, okay, and so engine is different. So for me, just AI provide a different engine for the robotics. That's what I'm thinking about robotics. Okay, yeah.
How do you see China's AI landscape then evolving over the coming months or years?
Yeah, I think that one of the very interesting things for China is we just have the opportunity to explore millions of things, okay. And people just fascinated about this technology. They are doing a lot of different things. Some, probably most of them will be gone, as I said, in 5 or 10 years. But that's not bad, okay. And just help us to explore these things. That's one thing. The second thing is really about how you view the market in China. So 30 or 40 years ago, when people talking about the market in China, we're talking about established market. So basically, it's basically a market for you to sell things, okay. That's typical, way we are talking about the market, okay. But my experience working on the Alibaba Cloud, I would say the market has a very important function, is how to make a technology mature. So you can test your technology very quickly in the market, okay. So technology will never get matured until go to market. So today, actually, China market has a very, very important, play a very important role, is how to establish new technology and make sure the technology is matured enough, and even as a test bed for the new technology. So market is not a traditional market anymore. It's basically a test bed of all new technology. I think that China could play a very big role of that, yeah.
If though sometimes, we know the innovation cycle in Chinese AI has been very fast.
Yeah.
But what happens if that slows down? Sometimes I'm hearing concerns, for instance, DeepSeek hasn't released a second reasoning model. Is that something that you need to be worried about?
Let's see, I would say as just like a single organization or single person, you really cannot go that fast for a long time, okay. You collapse, okay. Like, I can work in for 3 days and without any sleep, but not anymore, okay. Not anymore, and you really cannot work 30 days and don't have any sleep, okay. No way you can do that, okay.
Work ethic in China is famous.
But I would say collectively, we can have a very fast iteration, okay. So that's why I really like a stubborn mindset. So basically, DeepSeek could do something very fast, okay. And And then we also have Queen, okay. And then we have Kimi, okay. So collectively, and we can push that fast. I think that's okay. Actually, that's what I think is important. Otherwise, why we need that population, okay? So that's why, when people get together, and it's not just for, competition, whether you win or not. It's basically, you can have the very fast iteration of the technology because of this competition, or because, and you work fast this time, and you slow a bit, and then other guy move very fast, and eventually we slow down a bit, and if you're good enough, you can catch it again. And I don't think it's brutal, but I think it's very healthy because, and when we work with the people that is very competitive, that would make you much more competitive, because that was the way how I think the new technology would be invented. Yeah.
Yeah, you're talking, I guess, about more of a marathon, not just a sprint race.
Yes.
Is there space, though, for new contestants to enter that race today?
I would say, at least for AI, it's a marathon, because I think nobody could really see, if it's a long journey, it's definitely in the very beginning. Okay, so in that sense, any short-term win is not important, and it's not like again, I want to say this is a very important judgment. You have to, but I think we have to make that a judgment is, whether any advantage you have today is a barrier for other people to catch up with you. Okay, but personally, I didn't see any advantage you have today will become the barrier for other people to catch up with you. Okay, it's just an early process to next stage. Okay, and so that's why it's very exciting time for that. Anything that at the early stage, anything that actually everyday new things happen, it's exciting time, especially for youngsters. Okay, yeah.
You mentioned Kimi from Moonshot and Alibaba's own model, DeepSeek. I mean, is there any of the small language models, the large language models that stand out to you in particular in China today?
Actually, I would say there's a lot, and but you really want to get to know by the other people. That's hard. China is really a country that benefit from the stubborn mindset. So I would say if you look at the young people, for at least for the people that I have chance to reach, they have a very good stubborn mindset. Okay, and particularly like in an area like Hangzhou, and also this area, this Yangtze that area. I'm not sure whether you know about some of the saying that in Hangzhou. I don't have the statistics, but it's basically the people talking about. So if you counting the people in Hangzhou, and every 4 or 5 people there is a CEOs. Okay, so it just means people just love to do some things. So it is fascinating, and I think it's still good for the.
I'd love to see that statistic: 1 in 5 on the streets of Hangzhou being a CEO.
Yeah.
No hometown bias for sure. Okay. But when it comes to building an AI model today in China, what's the biggest challenge? And is it on getting it to market and getting that awareness and getting people to use it, or is it more on the building side?
And I would say the creativities, and the reason I said I really think, I have an equation about what's the challenge we have in terms of that. And the people always said, okay, the computing power probably is the barrier for us to do that. Okay. Actually, I don't think at this moment, long term, it is. But at this time, I don't think it is. Okay. So particularly in the last 6 months or 12 months, that's particularly true. That's what I want to say. Is, why I say it's creativity? The foundation model from Queen and from DeepSeek are good enough. they are already much better than GPT 4.0. Okay, so we really need to find some people that with creativity to write application for that. And so today I would say we are, in terms of application, we are so much biased by OpenAI because everybody saw the chat GPT is the only application that we can think about. So basically I would say there's much more a scenario we're thinking about and building an application that with the scale just like ChatGPT that would be there. So the number one is really find the right application for that. Yeah.
I'm taking a look at the book here that you wrote about also the journey around on Alibaba Cloud and your vision for the business. And the foreword is written by Jack Ma.
Yeah.
And he says that the first time he met you, he was shocked by your vision of the future of internet technology, and also that he wished that you'd met earlier. What I find interesting, though, is that you actually had to convince him and others at Alibaba that cloud was the right business.
Yeah, because, fundamentally, I would say, the cloud business is very different from internet business. Fundamentally, okay. So, but thinking about, almost 20 years ago, the core internet mindset is everywhere, okay. So for the cloud computing, it's not that fit in that sense. That's one thing. The second is, cloud computing is very different in terms of business. I always say to my colleagues, I'm very lucky to working on it. The first is a technology. Not like any other business, they start with the business, and technology just help the business, okay. But the cloud computing, not that case. So you have to have the technology first. That's the key. So it's a technology. The second, not every technology could become the business, okay. Actually, I always say only 1% technology could be a business. So actually 90% technology, just technology, okay. So we're very lucky, okay, it's a business. And more important, it's a lasting business. So thinking about a lot of business, have this life cycle, every 10 years, you have to thinking about another opportunity, okay. But cloud computing is a very good business. It could last for another 50 or 100 years, okay, because the computing is so fundamental. So when we use an analogy about between the electricity and the computing, it means a lot of things, okay. So electricity is a lasting business. It will be there for another 100 years, okay. So that's the hard part for the people to really understand. So at the very beginning, it is hard, yeah.
Do you think that you knew, though, when you were starting it, that it would become the key growth pillar that it is today? I mean, it started as sort of a support to e-commerce. Today, this is one of the brightest spots of the company.
I can't say that actually I have a prediction. Today, actually, the AI is the big customer of the cloud computing, okay. I can't say I have that prediction, okay. But at that time, I'm sorry that I didn't expect the AI is coming so soon. Okay, I'm sorry to say that. Okay, yeah, but I do believe that they will be coming soon. They will coming, but it's too good for me. Okay, yeah, but I do believe that actually it is a good business, and because of internet. So you can see there's very interesting. If there's no internet, there was no business like cloud computing. But there's one thing, that's actually what I put in this book, is the internet bring the data together. So it's not a traditional business, okay? Traditional doesn't bring the data together. The internet brings the data together. And so I truly believe that the data will change fundamentally for us to doing the business, okay? But what I didn't realize is the data combine the model that actually creates something called AI and change the way of doing business. Okay, that's the thing. So we created the data, but we failed to realize earlier that actually, when computing data together with the model, then actually change the way that we're doing the business. Yeah.
It was a really tough challenge for you. I think that people sometimes maybe just brush over the fact, like starting a whole cloud business from scratch when it didn't exist in China at that time. And there was obviously a handful of companies in the US doing it. I know you looked to some of them for inspiration, but what were the biggest challenges that you faced?
First of all, I want to say how lucky I am. Okay. So how lucky I am. You know, believe it or not, okay. I never wrote a business proposal for Alibaba Cloud.
Really?
Yeah. So that basically means you have no way to write a business proposal.
Well,
okay?
nobody had pushback.
Yeah. No. That basically means you have no way to write a business proposal. Okay. So personally, I don't like business proposal. So when I'm talking about innovation, I don't like business proposal. Okay. Personally, again, so that's why I said I'm very biased. So basically, there's no way you can write business proposal. So the only way you can do that is don't write that. Okay, that's one thing. Okay,
I can see why people had issues with it internally.
Yeah, that was so. That's what I'm very lucky. Okay, so if you're talking about how hard it is everybody think they are doing the cloud business. Okay, so even within Alibaba. Okay, and because it was so new, and you really cannot tell what it is. Okay, so. That's very challenging. But certainly, I think again, I'm very lucky, and when I started this, and the internet China is booming, and we have Starbucks. Okay, so actually, the first money I got is actually about the Starbucks. Okay, yeah, that was really memorable. Yeah, so that's why I love the small companies. Yeah. I love the person that don't have anything. That was mentality.
But I think something that we see right now is certainly money that's being directed at strong talent.
Yeah.
And there's stories, of course, in Silicon Valley we see of people that are getting hundreds of millions of dollars. And what do you think about that?
I think it's. I don't think it's the, let's see. It's a typical way of doing things. Okay, I would say that. The reason is very simple. You know, with our own example, when I started the Alibaba Cloud, you know, the first thing I did, that was in 2008. The first I did was with the Silicon Valley, and to try to get talent. Okay, and after talking to all the people, and you realize actually we don't have much talent there. Because it's new.
Okay.
So, and also with some of the talent, it's just too expensive. Okay, and too expensive basically means okay, you don't know whether the cloud business is there. Why need to hire? Why need to hire these people? So it's really about innovation. So when you are in the early stage of innovation, I don't think talent is a problem, because the only thing you need to do is to get the right person, not really the expensive person. Because if it's a new business, if it's true innovation, that basically means it's talent. Nobody cares about them. Okay, otherwise we're going to working on that. So for today, what happened for the Meta is because they are very much focused on the existing success of the business and existing establishment of technology. That's my view. Okay, so I think we have a tremendous opportunity to look at technology nobody knows today, and these are talent, but these are. I can't say it's cheap, but it's it's available for you. Okay, so that's really about the vision. Where you want to go, and there's a lot of similar things. Happened during the last 20 years also. Whenever everybody knows that these are talent, and it's better for you not to get in. And at least that's not new. That's my so like personally that I hired Zhao Jin. Now he's the leader for the Queen. Okay, you probably met him. When you were in Hangzhou. I personally interviewed him. 15 years ago. And we got talent. Now he's leading the Queen. Yeah. But So that's.
So
that's,
there's not really any justification, then it sounds like you think for such
so I think
salaries.
That's not what I'm sorry. What happened in Silicon Valley is not the winning formula. That's what I believe. Yeah.
Hello, we're still here. Brief look across these markets as we go into the thick of the week here. Of course, coming out of the exclusive conversation with Bell there and the Cloud business. By the way, speaking of Alibaba and where Bell is on the Shanghai World AI Conference, news here that Alibaba outperforming today separately because of this previewing its first AI-powered glasses that are coming through well. Okay, that's according to not a report, actually. Yeah, the company's actually come out and said that S&P carried the report. But anyway.
Quark glasses, how they call it. So they unveiled that at WAIC, where Bell is right now, and really talking about the innovation there as well. That's why the stock is up. So we're watching other moves here. So the insurance space has been pretty interesting. Morgan Stanley with a note out about AIAs, thinking that the new business growth is looking pretty strong. So they're raising their price target for that stock. We're seeing it up some 5% here right now. You have another call, the City call on Hong Kong Exchange too. Yeah, in their case, they're maintaining a buy, but they're also raising their price target for HKX, given, of course, everything that's taking place here as far as the fundraising environment is concerned. HKX is also outperforming today. It's coming up on your screens. Wuxi AppTech is an earnings story that's coming out today. And the other big story here in Hong Kong is CK Hutch, the filing and the potentially bringing in a major player in the consortium, and maybe more clarity on that. Yeah, Bloomberg News has reported on Friday that it could be that strategic player is China Costco shipping there, but the stock is now coming off some of the initial sort of highs that we saw on that news as well last week. Samsung's a big one here, so we did hear also about this big sort of deal with Purdue Semiconductors for one company. Our sources say it's Tesla that is that new client, $16.5 billion multi-year deal. Euro set to be the big one there when DAX set to open a fresh record.